dollar ownership is going down, gold ownership is going up. But there was another major breakthrough that happened to gold that not a lot of people know about, which is that in July of this year, it became what's called a Basel III Tier 1 asset.
With this vulnerability exposed, emerging market central banks began reducing exposure to U.S. assets. They sold treasuries. They sought alternatives. Andre argues that what we're seeing is not just a passive shift, but a structural rethinking of global reserve strategy, trust in paper assets, self-sovereignty of reserves, and geopolitical risk all are in play.
My name is Andre Jick. Hope you're doing well. Come for the finance and stay for the gold. So before I get into how China's rebuilding the entire financial system, I want to explain the bird's eye view of why the world is even looking at an alternative in the first place. And it really comes down to the idea of trust. The trust that countries used to have in dollars. For example, around 70% of all the global reserves were once stored in US dollars. In other words, countries held their wealth in US treasuries, bonds, right? Because they were considered to be the safest assets on earth. But then that started to change sometime in 2022, because that's when the United States froze about $300 billion worth of Russia's foreign reserves. Now, regardless of how you feel about that politically, what it showed to the rest of the world was, if your reserves are held in dollars, they're not really yours to begin with. They can be seized, they can be locked, and we can just turn it off with the click of a button. So countries were like, okay, I have a question. If you can do that to a nuclear power like Russia, what happens then if we disagree with you next, right? So that's why this change started to accelerate, because there was this loss of trust for paper assets. Central banks around the world, especially in what are called emerging markets, started to lower their exposure to US assets, and they started selling off their treasuries, and they started buying gold instead. Slowly at first, but then faster and faster. Check this out, this is fascinating. This is a chart of how much gold China has. For the longest time, you could see it didn't really move anywhere, kind of going sideways. They bought some, they sold some, they bought some, but as soon as President Trump started the tariff threats, the chart explodes, right? China starts publicly accumulating gold and locking it up in their vaults. It's the fastest pace of buying in modern history. It's being done on a scale that's publicly, this is important, publicly visible to the rest of the world. Because remember, China could easily be buying this stuff in private, but they're not. Because what that does is it telegraphs to all the other countries that, hey, look at all the gold we've got. We could now get off of US treasuries. That gives us the ability to get off of dollars. You can actually see this trend on a way bigger scale here in this chart. According to Luke Rahman, in just a couple of months, gold's share of reserves on the balance sheet will surpass US treasuries. Again, just to prove the point even more, on an even longer time horizon, you can see the same thing has been happening. The dollar's share of global reserves have been falling to the lowest levels in decades. By the way, officially, the People's Bank of China reports that they have about 2,300 tons of gold or so. But the real number is probably way higher. Places like Bloomberg Economics and JP Morgan and the World Gold Council estimate that China probably controls closer to 3,500 to 5,000 tons when you include the gold held by state banks and sovereign funds that aren't really publicly disclosed. Okay, so hopefully I've established the point that dollar ownership is going down, gold ownership is going up. But there was another major breakthrough that happened to gold that not a lot of people know about, which is that in July of this year, it became what's called a Basel III Tier 1 asset.
Another pivotal shift. In July of this year, under the Basel III banking rules, gold was upgraded from a Tier 3 asset to a Tier 1 asset. Previously, banks could only count near 52% of gold's value on their balance sheets. Now they can count 100%. That change matters because bank accounting equals trust and usability. Gold went from shiny rock we hold to asset we can value fully.
Gold was actually considered what's called a Tier 3 asset under the old Basel banking rules. So what does that mean, right? Well, that meant that if a bank held, for example, let's say $1 billion worth of gold, it could only count about half of that value on its balance sheet, its piggy bank, right? The system was literally designed to make sure that gold stayed something that banks stored and did not use. But then Basel III came along and it changed everything. Gold was upgraded to a Tier 1 asset, which means that now banks can recognize 100% of its value. That's a big deal. But here's the thing, you still can't lend against gold. You can't borrow with it. You can't use it for repo. By the way, repo is the short-term lending system that keeps the entire global financial system stable. It's where banks borrow from each other overnight using treasuries. It's complicated, but what it means is gold went from being a shiny rock to now a more valuable shiny rock with better accounting. Okay, but that's where China stepped in. Because the next level above Tier 1 is something called HQLA, which stands for High Quality Liquid Asset. These assets are so safe, so stable, and so liquid that banks can actually use them as collateral in financing. Right now, those assets are basically US Treasuries. It's the plumbing behind every loan, and repo, and credit facility in the world. US Treasuries are what's used for the whole system. Now, if you're a country and you want to build, let's say, a port or a factory or a power grid, you got to go to the central bank and you got to say, hey, I need to borrow some money. And they'd be like, deposit some high quality liquid assets with us and then we'll lend you the money, right? Now, again, that collateral is mostly US Treasuries, which is also why the US dollar has played such a big role in the world. It's the link to these treasuries. It is needed to borrow money. Okay, but imagine what would happen if gold was able to join that list. Gold would go from being a passive, shiny rock to a thing that could be used to borrow, to lend, and to fund infrastructure with, all without ever touching the dollar. If gold becomes HQLA, countries will not need dollars to finance their economies anymore. And that brings us to the BRICS summit that took place in May. So for years, China has been trying to convince the entire world, mostly the BRICS countries, Brazil, Russia, India, South Africa, to use the yuan in their trades. But everyone pushed back with the same question. And this is hypothetical, but I imagine this is how their conversation was going, based on what's happening.
Andre argues that China's push is serious, not just about accumulating gold, but about enabling other countries, e.g. across Africa, Latin America, Asia, to finance infrastructure, trade, natural resources development using gold backing, Chinese currency, yuan, and Chinese-led systems rather than relying on dollar-denominated channels and US-centric institutions.
China was like, will you guys use our currency, please? And they're like, okay, we'll use your currency, but would mostly just rather use the dollar. But out of curiosity, what are you backing it with? And China's like, well, we're backing it with our economy. We're the factory of the world. It's stable. But as an added perk, if you want, we'll let you convert your yuan to gold anytime you want. They're like, that's cool. Okay. But where's the gold going to be stored at? China's like, China. So all the other countries are like, no, we're good. Now, we've seen how that played out before with the US. So we're not going to trust you to hold our gold. That was a conversation that was happening years ago. But at the most recent BRICS summit, China had a lot of brilliant ideas to solve a lot of the problems those countries had with using the yuan. So here's how China is going to get the developing world to use their currency. So the first problem that they've solved is trust. Because if you're India or Brazil or South Africa, you're not just going to take China's word that they're going to keep your gold safe, right? You want to see it, you want to touch it, and you want to store it somewhere that you could access. So China built what's now being called as the gold corridor. So think of this as like an analog version of the blockchain. But instead of blocks verified by miners, it's a network of gold vaults verified by nations. The joke that Sorrenthic had was like, it was a Fred Flintstone chain of blockchain, right? Each vault is connected to the Shanghai Gold Exchange, the SGE, and it tracks every bar, its purity, its serial number, who owns it. So that one change fixes the problem of decentralization and trust, because the gold custody is now geographically decentralized. It's verifiable, redeemable, and auditable to an extent. Now, the second problem China had to solve was something called volatility, right? Because if you're going to use a commodity like gold as collateral for things like loans, trade, or financing, you can't have price swings every single day. You can't have something that a nation with, let's say, a ton of money could just manipulate the price of. So here's how they're going to solve that. They're solving it by using what's called a moving average to stabilize the settlement price instead of using what's called a daily price. In other words, instead of pricing gold by whatever it's worth this morning, instead they might average it out over the last 200 trading days. So whatever the price was on average over the last 200 days is the price. So that makes gold much more predictable, less volatile, and it smooths out the price risk for everyone using it. Now, here's where it gets even more interesting. And this is the most likely thing that China is about to do next. This is what scares the US big time. China is going to use this network, this system that it's building, to build other countries that need financing. So think about Africa, for example. A lot of countries there are really rich in natural resources and commodities like gold.